Highs. Let me bring back in Erin Gibbs and Wieting. Stephen, you're at Citi in Private Wealth. The Fed really had an opportunity here to make an important statement. Number one, that we're not in an emergency economic situation anymore. Right. Economy's not great, but it's not an emergency. Do you think that they will raise in December?
I think that they will raise in December. They'll see better data than we saw in August. I thought it's interesting that Chair Yellen was asked about their forecast for the long-run funds rate of 2.5% to 3.8%. That range
right now we're
normal.
at 0.5%.
Yeah, 0.375. Yeah. You know, so part of the point is what sort of paradise would you need to get to in order to go from here to there? And the point is that they probably won't do that over the course of this economic cycle. And, you know, sort of the big questions are not, well, today it was crucial to raise the funds rate, but there was so much easing over the course of the crisis that, as she said in the commentary, that creates risks of bubbles, and that can be destabilizing ultimately.
Erin, over at S&P, and again, when you look at how to involve your clients in how to invest around this, sure sounds like a lot of gobbledygook when 1 minute they're saying, well, we're waiting for better labor numbers. Then it's labor numbers are okay, but now the labor slack isn't being taken up quickly enough. What do you tell clients and what do you tell our viewers right now about how to invest through this language that seems to be very confusing to a lot of people watching?
I think one of the key points that she made, she talked about investment levels have been low and productivity growth has been slow. And she specifically says productivity growth means that we don't have a better standard of living, right? So that means that people just don't have more money to grow. We're not seeing corporate profits grow as quickly. And so we need that quantitative easing in order to keep that stimulus keeping going. So yes, we do have the increased jobs, but we want people to make more money, right? We want that wage growth. We want that productivity growth. And so I think that's when we're really going to see ultimately the corporate profits start really growing as expected in 2017. So for me, the lowering of rates down to 0.6 is exactly what we expect in one rate hike in December.
You know, we're looking at the market spiking at the moment, and we